Hey, hello, class 10 for ICSE. Today I am going to introduce a new chapter of your maths that is goods and service tax. This is a very important chapter for board exam because from here you will get one MCQ and one broad question from it. This is very important and very interesting chapter. I just can't resist myself from doing this video because this is very interesting. So let's start. Before going direct sub goods and service tax, you have to first introduce yourself to what is tax. The tax word tax is derived from a Latin word taxo. Now, what is tax? The amount we pay is used by the government to support critical aspects of nation's development, boosting the economy of the country. See, you are purchasing you are a service or business owner, you are purchasing some goods, later you have to sell it to your customers. Okay, assume to yourself as a any farm owner or any business owner. So when you are purchasing or the customer is taking something from you, this is tax. Why government is taking the extra money? Because for the nation's development and the further boosting the economy of the country, nothing else. Now, this tax system is not a present event. This is a historical event from a very past period of time. The tax was introduced. Okay, if we see the history of the taxes, then we will get that the mention of taxes can be found in Manusmriti. The formal taxation systems existed in India during the Mughal kingdom. Mughal kingdom, they brought the jizya system to prominent in India. It was levied the tune of 1/6 of the produce. The evolution of the modern taxation systems in India can be traced back to the colonial period when Britishers introduced a taxation system to compensate for the losses suffered by them during the revolt of 1856. Okay, the income tax was passed in 1918, I guess. It was 1961 that the modern taxation system was introduced in India. I will it later. So what I am trying to say is this tax event is not a present event. It is a historical event from a very long period of time where paying taxes to the government in case of the Mughal kingdom, in case of whatever the historical events. What is GST? So GST, what is the full form of GST? The full form of GST is goods and service tax. Okay, it is a kind of indirect tax. Now, what is indirect tax? I will get it later to you. Now, we have to know that when was the time government made policies for taxes? Government made policies for taxes 1st July 2017. Government first introduced a GST. Who is the government? It is central and a state government. Okay. Why government introduced GST? The taxes of payable amount in India used to differ state-wise. To omit them and maintain a single payable amount, government introduced GST. The 17th indirect tax was omitted and merged and GST was introduced. The payable amount of GST used to before the GST was introduced, the taxes used to differ state-wise, and to maintain it, to omit the difference of the payable amount and to merge all of that, government introduced GST. And the 17 indirect tax, we will see it later when we will learn about the two kinds of taxes. Okay, two kinds of taxes, that is direct tax and indirect tax. What is direct tax? The tax directly taken from person. And what is indirect tax? The tax that is taken in purchasing is known as indirect tax. When we purchase something as a service owner, as a business owner, as a farm or business point of view, that is indirect tax. And what is direct tax? Directly taken from person, from a individual person. Okay. So there are six kind of direct tax, that is income tax, corporation tax, property tax, inheritance tax, gift tax, wealth tax. 5 and 6 you can see that it is a direct tax. Indirect tax is custom duty, excise duty, service duty, sales duty. VAT is a very famous indirect tax. We all know that. And more 17 set. That more 17 tax, including those tax, this used to differ from state wise, and government made policies to merge all the different taxes, all the different payable amount, and made it one scale. They introduced GST. Okay. Now the question is, for whom will government take GST? It's the condition for the government for taking the GST. The conditions are, that is point number 1, when any service center business will income 20 lakhs and above, they have to pay GST. The government will not see the profit, whatever the profit is, the government will not see the profit. But if the income is 20 lakhs, or you can say in service 40 lakhs and above 20 lakhs and above in service 40 lakhs, then you have to pay GST. Okay. The conditions, number 2 is, if any business is done interstate, that is interstate or integrated GST. This is one kind of GST. We will read it later. From one state to another, they have to pay GST. And condition number 3 is, any business purchase that is done online will have to pay GST. You can see that in case of Zomato or other online purchases, you can see the bill that we have to pay the GST. Okay. Now, who is taking that money of GST? I have already told you that the central government, half state government and half central government is taking that money. Okay. Now, types of GST. What are the types of GST? Central GST, state GST, union territory GST, and integrated GST. I have told this before, integrated GST. So, state GST. Same state business. 2 tax, central GST and SGST. Central must the goods give and take, or business give and take policy among one state only. They have to give 2 tax. That is, one is central GST, that is must, and one is state GST for the states only. Okay. Now, if we take an example, like suppose 80% total GST, if 80% is total GST of a particular state, then 9% will for central, and that is must, and rest 9% will for the state. Okay. So this is state GST. This is state GST. Now, what is union territory? Says ruled by central government such as Jammu Kashmir, Ladakh, Pondicherry, Delhi. In this case, central GST plus UT GST, union territory GST. And if we take another example, like same, just like that, that 80% of total GST, if the GST is 80% total, then 90% will be central, that is must in every cases, you can see here and here, and 90% is UT. Now, in case of this is very important, that is interstate or integrated GST, purchase and selling products or business from one state to another different state. If for you just like Bihar, okay, in case of Bihar state, there will be 2 GST. One is for central, that is must, and one will be for state. Okay, but when, just take an example. Suppose one good is made in Rajasthan, a product that is made in Rajasthan, and that product is being sold in UP. Okay. In this case, both are under central government, so CGST is necessary in both cases, Rajasthan and UP, in both states, and both are under central government, so CGST is necessary. Then there is nothing about doubt about that, and the rest is another GST. The both state may start argument in this taking the GST. Now, it is also called destination GST. Why destination? We know what is destination. Traveling from one place to another. This is suppose Rajasthan from Bihar. Now, Bihar is the destination. An example, but before that it is nothing but the conjugation of CGST and SGST. How? I will tell you that. Suppose 80% of total GST, as we have taken an example before, and in this case I am also taking that example, that 80% of total GST, the central government will take 90% of that, and the rest of the 9%, I am telling 90% constantly. So 9% is 9%. Those two states will argue about this 9% who is taking the GST. In this case, the integrated GST is being introduced, and the rest of these 9% GST who will take this, in this case, the destination where the purchase is being sold, that state will take this extra, rest GST. Now, in case of farm or business point of view, we have to suppose there are a gang of people in a partnership business. Okay, then they have both to pay government GST and to take GST from the customers they are selling the products. I will explain it how. Point number 1, you can see here that they have to purchase goods, that is expense. That means a gang of people or are in partnership business, and they are purchasing a product from somewhere, and it is their expense, and when they are purchasing that goods or products, they have to pay a GST to the government, and this will be called input GST, the GST that a partnership business owner is paying to the government. Now, when they are going to sell the goods to the customers or individual, will generate some income, and they will take GST from that customers. Then we will call it output GST. Am I clear? The GST that is collected individually from customers is known as output GST. And if this GST is more than they paid the GST to the government when these business owners are purchasing the goods. I'm saying it again, that the GST, the output GST, that means the partnership business owners, when they are selling a product to individual customers, they are taking a GST from the customers. And this GST is known as output GST. When this GST is more than the GST input GST, that is those business owner, they gave the GST to the government, the output GST minus input GST. This is formula number 1. And in case the business owner input is more than the output, that is they paid government more GST during the purchase and collected less GST than customers, then they will get GST credit. That will be input minus output. That is formula number 2. Now let's elaborate this. Now suppose we purchase a product that range value is 100 rupees and 10% GST on it, that's the product value will, the purchase value 110. Okay, in this case we have given 10% in form of GST. 110 means 10% GST and 10 rupees on GST. Now if we want the same product purchased, and we want the same product to sell to the customer, there must be a profit. Now if we sell the same product at 150 rupees on 10% GST, 150 rupees on percent GST means 15 rupees 15 as GST. That means 165 total. Customer will take the product, will also give 10%, that means 165 as total. Okay. Now when we purchased the product, we gave 10% or rupees 10 as GST, and when we sell the same product to another person, that person also has given 10% GST to us, that means 15 rupees. Okay, 165 total, 15 rupees. Now 10% or 15%, which will we give to the government as GST? This 15% is output GST, as I told you here before, and this 10% is 10 rupees is input GST. Now 15 minus 10 rupees, 5 rupees is output minus input. So as we have given 10 rupees 10 before, we will not give any that 10 rupees to the government. We will give only 5 rupees. So total we have to give 15 rupees, and is included that we have given before the government when we are purchasing the product. Okay. Now what is the profit? What will be the profit? 165 minus 110, 55 rupees, but this is not the actual profit, because 15 rupees 15 we have to give the government. It is needed to give the government, then the total profit will be 40 rupees. GST as an individual point of view, regularly when we purchase something, we paid a price. That price is included GST. That price is not the only price, it has included already GST. So the formula is taxable value into 100 plus GST by 100. Now what is taxable value? Taxable value is nothing. It is the value of which GST will include. So suppose take an example, a product cost 1000 rupees and it has written 20% discount on the product. Now that means GST will not include that 1000 rupees, because it has 20% discount on it. 100,000 into 20% discount, 20 by 100, that is 200. Now GST will charged on this price 200, okay, because of that 20% discount. Now what is taxable value? That price on which GST is charged, in this case 200, okay. If the list price or mark price or catalog price etc, the value is given, suppose 1000, and there is no discount on that, then the taxable value is the selling price, because it has no discount. Then it will be LP, that is list price is equal to MP, mark price is equal to CP, catalog price is equal to taxable value. And if discount is given, suppose 10% discount on 1000 rupees, then 1000 into 10%, that means 100 rupees, and assume GST on that 1000 rupees, count 1000 rupees and discount 10%, and on that there is 10% GST. Then the formula will be marked per price into 100 minus discount by 100. Then in this case it will be 100, mark price was 100, sorry, I have done it wrong, it will be 1000 into 100 minus 10 by 100 is equal to 900 rupees, okay. So GST is 10 so GST is 10% of GST will charge of that 900 rupees, so it is 90 rupees. So I have to give that shopkeeper the selling price 900 rupees including the GST, that is 90 rupees. Another formula of price including GST is equal to selling price plus GST, okay. Now let's solve some questions. Mr. Abdul, a manufacturer, sells his product worth of 2,25,000. Within the state, he buys goods worth of 1,20,000 within the state. If the rate of GST is at 12% on the raw material and 80% on the finished product, find the amount has to pay. Now you can see here that within the state, that means integrated GST or interstate GST. Interstate GST means GST and the CGST plus SGST. So cost price is 1,20,000 and selling price is 2,25,000. Okay. Now 12% is on the raw material for when they were purchasing the product. We can call it input GST, as I have told you before, and 80% on the sell when they were selling the product, that we can call it output GST. Input GST, what will be the input GST? 1,20,000 into 12 by 100, because 12% was input GST. So paid GST is 14400, and output GST will 2,25,000 into 18%, that is 18 by 100. Then it will be 40500 collected GST, the GST that is collected from the customers when they were selling the product. So what will be the GST? That payable GST, output GST minus input GST, as simple as that, 26100 rupees, okay. So I hope it is clear to you. Now I am ending this video here, and don't forget to subscribe and comment and share. Thank you.